Principal and interest or interest only? Which is the best option when you're buying an investment property? In today's episode, I'm going to break down which one is the best way to go. What are the pros and cons of both? What do I actually do as an investor myself? And what are some of the things you need to think about when making this decision? Stick around because this is a great episode that's going to help you make the decision before you go for your finance and speak to your mortgage broker or with your lender. In case you don't know me already, my name is Steve Williams. I'm the founder of W Property Advisory, and I've helped tons of people across the country get their foot into the property market with an investment property. And on this podcast, we chat all things rentvesting, property, and getting ahead. So hit subscribe because I'd love to have you come back again. And we've just hit 2,000 subscribers. And thank you to everyone who's been supporting the channel. I'd love to get your comments. So feel free to comment if you have any questions. If I don't know the answer, I'll direct it to the right person. But I do get back to everyone. So pop into the comments anything that comes to mind. Now let's jump in and talk about what's the pros and cons of interest only and principal and interest. And then we're going to dive in. I'm going to show you what do the numbers actually look like. So firstly, let's talk about interest only because a lot of investors do go with that option. Of course, when you're only paying the interest, it means that your cash flow position is going to look better. You have to fork out less money each week, meaning that it might be more affordable for the average investor, especially if you've got multiple properties. It might help you managing your money a little bit better. But one of the downsides of interest only is firstly, you'll find that a lot of lenders actually reduce your borrowing capacity, which is a bit surprising because you'd think if you're paying less money each week, maybe they'll lend you more money. But from my experience, when I go for loans, if you go for a principal and interest option, you often actually get a stronger borrowing capacity, which means you can borrow more money to go towards your property. So that's something you want to ask your mortgage broker, whether you can get a better borrowing capacity by going principal and interest. The second thing is that interest only loans, they typically have a period. So it's anywhere usually from like 1 to 5 years. At the end of that period, then it reverts to principal and interest. And at that point, you can either refinance the loan as interest only or just head over to those principal repayments. So that can therefore affect your cash flow as well. So really note when that period ends because it can come as a little bit of a surprise, especially if you've got multiple properties. The other downside of interest only is sometimes the interest rate is a little bit higher. So recently when I refinanced, I found that the percentage was about 0.25% higher. So obviously forking out more money to have the benefit of interest only. But it's not a huge amount, but it's just something to be aware of. Now, what about principal and interest? Is it worthwhile? Well, as I said, technically it means you can get a better borrowing capacity. It does mean you pay back the principal of the loan. So the life of the loan has an expiration date, usually 25, 30 years, at which point the loan would be fully paid off. So if you're looking to reduce your debt gradually and really forcing you to save money, that's what I like to call it, is forced savings rather than principal, then it can actually be beneficial to start build your wealth and actually force you to save that money aside. Obviously, as I just said, you'll find that the interest rate might be a tad bit lower. Obviously, we love lower interest rates, but again, it's not a huge amount, but just something to keep in mind if you are looking to save a few dollars. So we're going to jump in now and look at what do the actual numbers look like between those two options. All right, so we're at our trusty cash flow assumptions spreadsheet. Now, this is available for you, absolutely no cost. And also, I'm not going to get your email address or anything like that. I've got the link below. So if you want to click and get access to this free Google Sheet, it's going to take you to this page just here. And I've got a bit of an explainer video that tells you how does this Google Sheet work and how can you use it to best decide and assess whether an investment property is right for you. Also, while you're there, if you are looking to buy a property and you need help, there is a calendar. Feel free to book an appointment into my calendar and let's chat to see what your goals are. But back to the Google Sheet. Now, I'm making some assumptions here that we're purchasing a property at $750,000. That's what a lot of investors I'm working with at the moment. That's their budget. And the interest rate currently is sitting at about 5.99% for the average investment loan. Now, if we head over to the second page here, we'll see that if we are doing principal and interest, so P&I, we'll find that the repayments are about $556 per week. Now, I've just made assumptions around average rents and things like that. This is going to really differ depending on where your investment property is, but this is basically after all of your expenses that we've estimated. So about holding costs about $556 per week, whereas interest only is $383. As I said before, I always say that principal is a little bit like forced savings. So if you're wanting a way to force you to set money aside, then principal can be a good way to go. So as you can see, there's not, a huge difference between the two. It's basically $173. So $173 that you'll be putting aside each week to repay that initial principal. Now, of course, this is pre-tax, so speak to your accountant, but what you'll find is that the interest only amount, that's the tax deductible amount, whereas principal and interest, that is the, including the principal, and of course you can't tax deduct principal, can you? So I've talked about the cash flow after all of your typical expenses for an investment property, but let's just focus on the actual cost of the actual mortgage itself. So based on the $750,000 loan at 5.99% interest, the principal and interest repayment is $53,902 compared to the interest only amount of $44,925. Now, that is a difference of $8,977 that you have to fork out each year to repay that principal. So in my example, I pay myself a salary of the tax bracket, meaning that I pay tax at a rate of 37 cents in the dollar. So if I tax deduct that difference, the difference is a saving on tax of about $3,321 per year. All right, so I hope the numbers all make sense there. As I said, get that Google sheet, click the link below, and you can access that and have a bit of a play around to see what the numbers look like. So what are some of the other things you need to think about? And what do I actually do as an investor myself? And which do I think is the best way forward? So over the years, I've refinanced my loans many, many times to try and firstly get access to more borrowing capacity and also to find a better interest rate. And typically what I do is I speak to a mortgage broker and see what options I can get. As I said, I can normally get more money if I go principal interest repayments and less money if I go interest only, and also a better interest rate if I go principal and interest. But what I normally do is look at the cash flow situation. If I can sustain paying principal repayments and, I'm happy to fork out that extra money each year, then often I do go with principal and interest. But if cash flow is a problem and maybe the rents on the properties aren't that high, then I might go with the interest only to make it a little bit affordable each week. But over the years, I've chopped and changed, and that's the thing. As long as you don't go a fixed rate, if you go variable, every so often you can check in with your broker, do a refinance, and even change it from interest only to principal interest and back again. And if your interest only period does expire, say you got a 5-year validity, you can then refinance it and go back to interest only and get another period of say 1 to 5 years of interest only. So what I typically do is at the moment, most of my portfolio is interest only. I do have one loan that's principal and interest, and that was just because of the way the bank wanted it to be. Sometimes you got to go through that short-term pain for the long-term gain. But what I then do with the interest only loans is rather than, paying back as repayments, I just put the extra money that I have into an offset account, which effectively is like paying more money back, right, so to speak, and I'm saving money off the interest. And it means I then have that money if I want to use it for maybe another investment, or maybe I have something come up that I need to fork some money out on. So essentially what I do is maximize the debt, go to an 80% loan to value ratio. So basically 20% cash deposit, 80% bank loan for all the investment properties. And then any additional money that I have on top of that, put it into the offset account. And that's what I find works best for me. Everyone's circumstances are different. So speak to your advisors, speak to your mortgage broker, speak to an accountant, all of the professionals you need to make the right decision for you. But hopefully this information will help you make a little bit of a better decision when it comes to which option to go with. It can be a bit confusing, but ask the professionals. They're there to help. And again, if you have any general questions, pop it into the comments. Love to hear from you. This one's a nice short one. Remember to subscribe. I've got lots of cool content coming up. So we'll see you next time. Until then, I'm Steve Williams, and let's Rentvest and get ahead together. All information contained in this podcast is general in nature and does not consider your individual circumstances.
You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.